Hello. Today we are going to find out what is a cash flow statement. Well, a cash flow statement is the third most important financial statement after your income statement and your balance sheet. What does it do? Well, a cash flow statement, as its name states, allows you to keep track of the cash that you've received and the cash that you've paid out. This is an example of your cash flow statement. Well, this is you can have annual cash flow statement or monthly cash flow statements. This one in particular is a monthly one. What does it do? So first you start with the cash that you have on hand, and then you can see in terms of income how much you have received in cash, not the one that you have left your customers with because you gave them some credit or they promise you to pay you in 30 days because this is the arrangement. Here we see only what in terms of uh, in terms of here we see how much money you have received in your bank account. Yeah. Then you can see how much money you have gone out because you've paid, the wages, because you've made some purchases. You can see that here, the payroll expenses. So everything that you have taken from your pocket, literally, and you have paid to any of these suppliers or whatever, utilities, rent. So because these are the expenses that you had to pay straight away in order to have your business running. And at the end, you have a subtotal of how much cash you have left. How much do you have left in order to uh, also pay your loans? So, for example, if we look at the pre-startup, obviously it starts with no cash left, and then on the first month it is negative. Because it's a startup company, we might assume, well, that's okay. But what I find positive is that throughout the month, his cash position has substantially improved, and it's cash positive in month 4. So this is magnificent. So this is in terms of if I am someone who wants to lend you money and I have a look at your cash flow statement, I'm going to check first if you have cash left, if you're managing well your money, if you're not spending too much where you shouldn't. Wages, as you can see, is stable. Well, you had the payroll expenses here and telephone hundred. That's okay. So I can literally check where you had overspent and where you are doing well in terms of your cash flow management. And at the end of the day, if here there is a positive trend, so if I am a third party and I want to assess your finances, I will say, okay, this company has just started, has made some good money, I mean positive money, so I'm not overly concerned with that. So this is what a cash flow statement helps the person who wants to assess your finance. This to gauge when as a lender or as a potential investor in your company, I want to check how you're doing. I will check your cash flow statement as one of the financial statements I need to assess in order to have an opinion of how strong you are financially speaking. Remember the three main financial statements that anybody or any financial institutions or any lender or business angel will require will be first your income statement to assess your performance, second your balance sheet in terms of cash, how you're doing, because you can have a lot of clients with whom you've had a lot of sales but they didn't pay you cash, so you are cash poor. And that can create a problem if you have a loan to pay back or someone else to pay because you don't have money in your pocket. So this is key for me to understand if you can have a good understanding of how well the money is flowing in your business. Why is it so important? So as you can see as we've talked about, it is so important because this financial statement allow anyone to see if you can manage your money well or not, and also to see if you have some spare cash, money left after all of your bills, taxes have been paid. Again, we come back to this example. If we look at the number 7, cash position, you see that at the beginning, the company is struggling. Obviously, it's the start, it's the pre-startup, but then gradually, wow, it's like increasing substantially. So this is a key information to keep in mind and also to focus on when you want to present strong financial statements, and in this case, a strong cash flow statement. So what can you do? Or what can I do to help me as a business owner? Well, first, make sure that you don't have too much money going out, more than money coming in. This is common sense. This is, however, important to keep in mind whenever you look at your cash flow statement. Does it make sense to you? Do you run a profitable business? And most importantly, do you run a business where cash is flowing? Also, it allows you to show if you have spare cash left after, as I said, all of your required bills and tax have been paid. A very good thing to do, and an advice from myself, is avoid big transactions, particularly outgoing transactions, obviously, at year end or at month end, if you have a monthly cash flow statement, because this is where I will see what you're doing as someone who wants to assess your finance. So if you want to show something that is stable, do your transactions in the middle of the month. Don't wait until month end, because if I see that there was a big uh, money transfer to pay something that shouldn't be there, well, I will be concerned and I will think to myself, there is something suspicious, and there will be some kind of concern. So avoid doing this. Again, I repeat it again, but at the end of the day, show a consistent growth in your spare cash, and if you use it, show that it has been for reinvestment purposes, but that you still have some cash left. So I hope this helped you. Please send me your questions if you want me to focus on a particular point, if you want some clarification on one item or another. I will be happy to come back to you and create some new material to make you understand your finances better. Thank you.